Hey everybody, it is Matty here with Altcoin Buzz with you on this Tuesday, and today we're going to be discussing some positive news in light of the recent price hikes that we've seen here on Cointelegraph.com. Most cryptocurrencies in the green as Bitcoin price hits 10,400. That's up quite a bit since our last video and up from a couple of days ago here on decrypt.co. This may have something to do with it. Bitcoin's hash rate reaches highs of 84 quintillion hashes per second. At the very least, there is a correlation there, which we'll explore. We have some tweets that we'd like to alert you to. And in what I think is going to be the main piece today, we'll take a look at this argument that the birth of Bitcoin can be traced all the way back to 1971. Do you guys know what happened in 1971 in US and in fact worldwide politics and economics that really set the stage for Bitcoin? Finally today on altcoinbuzz.io we'll end with this piece regarding Shopify merchants which can now accept Bitcoin payments via Lightning Network. Article is brought to us today by Luke. Let's first begin, however, with a snapshot of that market. It is a green sea on this Tuesday morning. Everything up 5.3%. We're at $264 billion, just shy of 265. Bitcoin is more or less leading the pack here, and it sits at $10,325 at the time of this recording with a 69.9% Bitcoin dominance. And this article sums up that news more or less as we've just described. Bitcoin price hits 10,400 here on Cointelegraph.com. Some of the altcoins are somewhat lagging, but Ethereum certainly has responded well. XRP, not so much. And this article contends that their sluggishness is perhaps due to some of the owners which are selling off their funds. But if you'd like to take a look at some of the more specific analytics surrounding individual projects, it's a basic article, but nonetheless, we'll link to it in the description below. Let's look now to some of the perhaps causality, or at least the hypothetical causality behind what is happening here. We're on decrypt.co. Bitcoin's hash rate reaches highs of 84 quintillion hashes per second. We talked about this a few weeks ago, how the trajectory for the hash rate was climbing ever higher and higher, but now it seems to be at a 9-month-long surge, coinciding, of course, with Bitcoin's bull run. So we went over 80 quintillion hashes per second on Friday, and this was the continuation of the upward trend that started back in December. That's when Bitcoin's price began to rise. That means the amount of computing power dedicated to, quote, hashing verified transactions is now at an all-time high. But whether or not it affects price is one thing. Really what's more important, or arguably more important, is the security that it provides, because the rising hash rate also means that the network is more secure and less susceptible to 51% attacks. The more computationally intensive puzzles that are being calculated at the same time, the more miners you'd need to launch an attack, and the coordination just becomes at a certain point impossible, logistically speaking. Here's an interesting factoid. The surge also coincides with China's rainy season. Rain is used by the hydropower plants that power the crypto mining farms in China's mountainous regions. China's rainy season is set to end in September, though apparently the season was delayed by about a month this year. The rise in Bitcoin's hash rate doesn't make the network any quicker, though, since block confirmations still take around 10 minutes. You wouldn't be 100% right to say that the price we're seeing now is caused by the increased hash rate, but you know what? You wouldn't be wrong either. I think the truth lies somewhere in the middle. There is a correlation, but it's not one-to-one. I don't think it's fully causational, at least in my opinion. But let us know your thoughts about that, as always, in the comments below. Speaking about the network here on Overtorment, at Overtorment on Twitter, did you know there are 8 Lightning Network implementations? 1 is LND, Go. 2 is Seed Lightning, C. 3 is Eclair, Scala. 4 is Electrum, possibly Python. 5 is Ptarmigan, C. 6 is BLW, Scala. 7 is Rust Lightning, Rust. And 8 is LPD, also Rust. Let's take a look now at this piece on news.bitcoin.com, why the birth of Bitcoin can be traced all the way back to 1971. And I'm sure some astute members of our viewing audience are already correctly guessing what it is we're going to be talking about in just a sec. But there was a major event in 1971 that really set the pace for the future financial markets, for monetary policy, speaking at least about the United States, and it certainly set the trend for all of the more recent advances now that we're seeing. And when I say recent, I mean in the past 10 or so years. They've largely been in response to these politics and these policies from decades ago. So just to introduce the context here, the world economy is a complex system that has undergone many different phases in the past century. As strange as it may sound today, there have been times when banking crises were rare. Pay was rising alongside productivity, and the US dollar would buy a certain amount of pure gold. Despite its obvious successes in certain areas, the global monetary system that laid the foundations for this time of stable growth eventually failed, and here's why. We will be skipping over some of this section on really the background of monetary policy. This basically introduces the idea of the Bretton Woods Agreement that followed World War II. So in 1944, the Bretton Woods Agreement initially sought out to create a new financial order that then stretched into decades into the future, I should say. And it created such institutions as the IMF, the International Monetary Fund. And to its credit, it did a great job in terms of stabilizing the world economy after a rather shaky period and, of course, tense relations internationally in the form of the Second World War. You can see here, for example, that the number of banking crises dropped basically to zero following the Bretton Woods Agreement. So from the mid-1940s to perhaps the 1960s or so, there was a significant decrease, again, just about to zero, of international banking crises, or in this case measured by the number of countries with banking crises. But fast forward to 1971, and that's what we're talking about here. In 1971, U.S. President Nixon killed the gold standard, which was the only thing lending credibility to the money printed by the U.S. Federal Reserve. And maybe that sounds hyperbolic, but that's the opinion of a lot of people. So that was the year 1971 when U.S. President Nixon's administration unilaterally terminated the U.S. dollar's convertibility to gold, throwing a major curveball into the system. This, of course, had many different effects, including many ripple effects and secondary and tertiary effects that we won't have time to get into. But in essence, there was a lot of productivity from that post-World War period to about 1975, 1979 or so. Wages and overall compensation for production and non-supervisory workers, now about 82% of the private sector workforce, tracked steadily upward alongside gains in productivity. So productivity, of course, has increased from really 44 till the current day. That hasn't changed, but what has changed, as you can see here, and what really broke off from the early to the mid-70s was the hourly compensation, the average hourly compensation, and the average hourly wage. The rising value of goods and services per worker meant rising pay, but that relationship ended in the 1970s. Because US dollars were no longer redeemable for gold after 1971, you also had this detachment of the fiat currency from its value. And the only thing really giving that fiat currency its value was the continual printing of it. And of course, as a result of that, inflation increased. Other negative trends after the abolition of the last gold standard include the ballooning U.S. national debt from well below $1 trillion in the 70s to over $20 trillion in 2018. And as of June 2019, federal debt held by the public amounted to $16.17 trillion. Last year, it was approximately 76% of GDP, and the Congressional Budget Office expects it to reach over 150% by 2040. At the same time, the U.S.'s goods trade balance has dropped dramatically, reaching a record low of almost negative $80 billion at the end of December. And as you can see here by the following chart, you had relative stability in terms of the national debt from 1940 all the way up to 1971. It was increasing, to be fair, but I think it was increasing in a responsible manner. You fast forward through to the 1970s, 80s, especially after the 1990s and into the 2000s. As you can see here, the trillions of dollars of debt we have accrued year on year on year have just reached this exponential point of mathematical explosion where, unless this is addressed as a national emergency, and I'm not American, maybe I shouldn't speak to it, but unless this is really given proper focus and emphasis, I don't think this is ever going to change personally, and I think it is the single largest problem that the States is facing right now. So there you have it. Will the next reserve currency be crypto? Well, there are certainly arguments for. There are some arguments against. But the manipulation that we've seen, the quantitative easing, the wishy-washiness of politicians who one day want something on the gold system, the other day can take it off without any reference to the public. Again, that wasn't a referendum of any sort. No vote was taken. No public opinion was collected. Cryptocurrency can avoid all that because it's not determined by politicians. It's determined, of course, by mathematical algorithms. You guys know the drill more or less when it comes to Bitcoin and blockchain technology, so we don't have to run through all of that. But if you'd like to take a look at the rest of this article, which posits some interesting points as to how crypto can come in and improve, perhaps replace the current system, the very flawed current system, take a look at this. Let us know your thoughts about it in the comments below. We realize it is a big topic, but a very, very interesting one. So do be sure to share your opinions and your points of view. Finally, today on altcoinbuzz.io, Shopify merchants can now accept Bitcoin payments via the Lightning Network, which we talked about earlier. Article here by Luke. E-commerce platform Shopify now features a Lightning Network plugin that allows its 500,000, 500,000 merchants to accept Bitcoin payments. OpenNode is the payment processor that facilitates Bitcoin payments for individuals and businesses, and it has a built-in Shopify plugin that allows stores that use the platform to accept Bitcoin payments through the Lightning Network. And their CEO, Afnan Rahman, said about the Shopify plugin, quote, "Other payment processors have failed to provide a smooth experience for both the customers and the businesses using them, and we intend to improve the overall experience." And currently, this plugin features the following. The payment amount is calculated using real-time exchange rates, allows for a fee-less and instant Bitcoin payments through the Lightning Network, supports traditional on-chain transactions using the new native SegWit addresses, no setup or recurring fees, and free Lightning Network and scheduled withdrawals. And that about wraps it up for the news today, everybody. Do be sure you are following us on all the regular social media channels and keep checking back into altcoinbuzz.io for all the latest. Hey, go ahead, like, subscribe, share, hit the bell to receive notifications if you enjoyed today's video. Best of luck if you choose to invest, but have a wonderful Tuesday, everybody. And as always, we hope to see you again soon in our next video. Take care.